What if I told you, the more responsible you try to be with money, the more the system quietly profits from you. And the biggest financial advantages available to ordinary people are the ones nobody ever explains? Because if you understood them, you'd stop being the perfect bank customer overnight. Stay with me, because secret number 5 changes how you see money forever. By the end of this video, you'll understand exactly how money actually grows, why most people stay financially stuck without realizing it, and how to quietly shift from being someone banks profit from to someone building real wealth. No complex finance. No jargon. Just simple truths you can use immediately. Most people think money problems come from spending too much. But look closer. You save a little. You borrow when needed. You trust the system. And still, years pass, and nothing really changes. Meanwhile, banks expand. Profits rise. Loans multiply. And ordinary people stay in cycles. It's not because you're careless. It's because the system works best when you don't know these 5 things. Let's break the illusion. These aren't conspiracy theories. They're simple financial realities. And once you see them, you can't unsee them. Welcome to Money with Jerry, a place where you sharpen your edge. Point number 1. Banks make money from your debt. Debt feels like help. A loan solves a problem. A credit card smooths life. Payments feel manageable. But here's the quiet truth. Your interest payments are someone else's income stream. Every month you carry debt, money flows away from your future into their profits. That's why debt is easy to get. And wealth is harder to build. Because one feeds the system, the other frees you from it. Point number 2. Your savings help fund loans. This one surprises people. When you deposit money in a bank, it doesn't just sit there waiting. It becomes part of the pool banks lend out to others. Meaning, your savings help create loans that generate interest for the bank. And the return you get? A tiny fraction. Your money works hard. But not for you. This is why simply saving rarely creates wealth. Point number 3. Financial literacy reduces their profit. Here's something uncomfortable. The more financially informed you become, the less profitable you are as a customer. Think about it. Someone who understands money, avoids high-interest debt, questions fees, invests early, builds assets. That person pays fewer charges, carries less debt, needs fewer loans. Which means, financial education quietly moves you from profit source to independent. And systems rarely rush to reduce their own profit. Point number 4. Compound interest is a wealth tool, not just a debt trap. Most people experience compound interest as something working against them. Credit cards, loans, accumulating interest. But compound interest itself is neutral. It's simply growth over time. And when flipped, it becomes powerful. Small amounts invested consistently can grow beyond imagination. Not quickly, not dramatically, but steadily. The same force that grows debt can grow wealth. And here's the key shift. Wealthy people let compound interest work for them. Struggling people let it work against them. Same math, different direction. Point number 5. They prefer you as a borrower, not an investor. This is the deepest one. A borrower pays interest. An investor earns it. A borrower depends on institutions. An investor builds independence. So from a system perspective, borrowers are predictable, profitable, recurring. Investors are different. They withdraw money. They grow assets. They reduce reliance. So guess what most financial messaging emphasizes? Saving safely, borrowing responsibly, credit building, rarely, ownership, investing, asset growth. Because investors eventually need the system less. And that changes everything. Now here's the empowering part. None of this requires wealth, or luck, or privilege. It starts with awareness. Because the moment you shift from borrowing, investing, paying interest, earning interest, saving, only owning assets, your trajectory changes. Slowly at first, then dramatically. If this video has been helpful, don't forget to like and subscribe to this channel. You may want to watch the video next to this one.